Hello, it's November the 9th, and Donald Trump will be the next president of the United States. That's a surprise compared to where polls were and where many in markets were predicting. It's maybe much less shocking in the context of Brexit. And I think you add these two events together, and there's a sense in the Western world that people are dissatisfied with immigration and its consequences. They are maybe disenchanted with globalization and trade, and also, I think, concerned about rising inequality. And these socioeconomic and political forces, I think, are going to play a much bigger role both in politics, economics, and in markets. In a sense, maybe the Trump election makes Brexit look all the more reasonable, and maybe makes the life of Theresa May a little bit easier. What I want to do in the next 5 minutes is maybe focus more on the market implications and the initial market reaction. Many of you know we went into this event being underweight equities. We didn't like the way the market was trading this summer. We thought valuations were relatively high, and we were worried about this calendar, which was really charged with a number of quite big, potentially risky events, Brexit and the Trump election. We had an investment committee yesterday before the election. We decided that in the event of a Trump presidency, we would move our underweight in equities to neutral, which we've done. I think over the course of the summer, I should say as well, the earnings outlook has improved a bit, and investors have a lot more cash. And I think that's one of the reasons why the market is better bid today, is that some of that cash is coming in to buy the dip. So we now have a neutral view on equities. We're neutral in the US. We're underweight Europe. We've made another important change, which is to take emerging market equities down from overweight to neutral, and emerging market FX currencies down from overweight to neutral as well. The initial market reaction, as I said, is much less negative than I think most people would have thought. And also, early this morning, the futures were discounting a near 5% drop in the US market. As I speak, the US market is up 1%. Why is that? I think there's two reasons. One, some of this cash is coming back into the market on that dip. I think a better explanation is that there's really two macro personalities of Mr. Trump in the marketplace, or two macro narratives around Trump in the marketplace. The first is the reflationary one. And here Mr. Trump is the businessman. He likes to borrow, he likes to spend. So the kind of stocks that have been doing well are infrastructure-related companies, building companies, companies who are also related to military equipment spend. Mr. Trump's got a very long list of boats and planes he would like to add to the capabilities of the US forces. There's also the reversal of a lot of Clinton trade. So solar companies are down 5%, and biotech companies are up 5 or 6%. If you look at the bond market, yields are pushing up towards the 2% level, and the dollar has been stronger, which again tells us that this reflation story looks like it's dominant, as is the hope that Mr. Trump and the Republicans like Paul Ryan will put together a package to bring back some of the corporate cash that US companies have overseas. The other story, which is a much less positive one, is the trade story. This is where Mr. Trump wants to roll back globalization. He wants to if you like, ration the terms on which the US trades with the likes of Mexico and China. And that view hasn't been tested yet. And I think when it is, the market volatility will pick up. I think we'll see the Mexican peso function a bit like the pound has done in the case of Brexit, as the barometer and maybe the cushion in the case of Mexico for concerns over Mr. Trump's trade policies. And I think as we get on in coming weeks and as we learn more about Mr. Trump's policies, particularly in the economic and foreign policy areas, I think the focus is going to turn more and more to trade and the possibility that globalization begins to falter. From an investment point of view, we move more from away from big global companies to those that are more national or maybe more regional in terms of their focus. So there's going to be quite a lot to focus on in coming weeks. I think the Trump cabinet should become clearer, and also I think the transition of the new Trump administration into power. He takes office on the 20th of January, is going to be very important. He's not well connected to the Washington establishment. He doesn't want to be, but that could be a short-term handicap in terms of getting his government in place. So a lot to talk about. We're going to bring you all of the investment angles on this evolving market theme. For the moment, we've changed our investment strategy. We've moved our underweight in equities to neutral, but we've also cut back some emerging market risk. Thank you and take care.